Hello friends, welcome back. In this video, we shall be taking a look at fund accounting. This is a very basic concept from accounting, but many a times, even some experienced auditors and accountants overlook the basic definition. It is of paramount importance that every society member, committee member, and office bearer understands this thoroughly so that we don't have any confusion on this account. Accounting practice can be of two types. One is general accounting, and we shall see what it is. And we have another one called fund accounting. Now, general accounting is generally for businesses, and their focus is on profitability. They have to keep track of profitability, and this system of accountability serves them very well. We shall take a look at this shortly in more detail. Fund accounting, by contrast, is usually used by non-profit organizations, by trusts, by cooperative societies, and the focus is on accountability. Members would like to know where the money came from, what was the reason for receiving the money, and how the money was spent. That is more about accountability than about profitability. Now, if we look at basic accounting principles, all of us know that in general accounting, there is something known as a revenue or income, and that is recorded in a ledger. A ledger keeps track of what is coming in and what is going out of the account. And then you have an expense account, which manages and maintains all the details of the expenditure. That is not exactly so when it comes to fund accounting. Of course, the natural principles of audit and accounting still hold good, but there's a little twist to it. And that is that this revenue does not go into one common ledger, but it goes into different funds. Thus, we can have a fund A, fund B, fund C, fund D, and fund E, for example. And these funds will be something like a watertight compartment. In fact, they will be treated like separate entities or separate companies. And the expense of each is tightly regulated and defined. There can be no revenue sharing, and the deficit of one fund cannot be made good by another. If fund A is running out of money and fund B still has money with it, it cannot transfer that in the normal course of time, and we shall see what the exceptions are. So as we said, the expenses of course are for each individual fund. This is an important point to remember. So we can summarize this thus, that in a fund accounting system, funds are received for specific purpose only, and they go to specific funds. Funds are spent for a specific purpose only, and surplus of one is not transferable to another fund. Let us take a look at some types of funds. Some funds may be unrestricted. The source and spending has no restriction. A typical example is a hundi in a temple. It doesn't matter who the donor is, and there is no traceability. Somebody comes and drops the money in the hundi, and the expenses also, there is no restriction. It is entirely decided by the management of the temple. There is another type which could be in a similar institution or in a different institution, which is a temporarily restricted fund, and that is only for a specific purpose. For example, in the same temple, there could be another fund which is specifically for providing food for all or some such program. It could be clothing for all or some such thing. And the third type, of course, is permanently restricted. In other words, the capital amount cannot be used except in the form of an endowment. That means earnings from that donation. So you decide who is the donor. He may be getting some kind of a tax concession, and this is the typical kind of a setup you have for a scholarship fund. So we have unrestricted, temporarily restricted, and permanently restricted types of funds. Now mind you, these are not separate boxes. Although the hundi does look like a box, these funds are just for accounting purposes. In the first one, there is no traceability of the source and no restriction on spending. In a temporarily restricted, you have both control and knowledge of the source as well as spending. In the third one, there are more restrictions in terms of capital and principal is protected. Talking about the fund accounting system in the society, all of you must be aware that if you open the book of bylaws, there are different and various funds that have been defined. We have a reserve fund, we have a maintenance and repair fund, we have a sinking fund, and we have a major repair fund. We'll take a quick look at all these four. Now, a reserve fund has been defined in Chapter 4, Section 66 of the MCS Act. And it says that every society which does or can derive a profit from its transactions shall maintain a reserve fund. So that brings us to the question as to what it comprises of. Now, a reserve fund will comprise of entrance fees that is received from members that goes into the reserve fund, transfer fees received from society members when they sell their flat. It could be premium received on the sale of the flat from the member, and amounts that are carried from the profit or surplus. So these are the various headings, and of course we also have donations which have been received by the society, except those which are received by the society for a specific purpose. So this comes into the third category, which was restricted funding. Important to note, which is underlined, that amounts carried out of the net profit or loss go to the reserve fund, and we shall see how they are transferred. One may ask, how come we are talking of a profit when basic purpose of the cooperative society is not to make a profit but benefit its members in various aspects of life? Well, if a society is not carrying on a business of profit like ours, in that case, profit shall mean excess of income over expenditure. Similarly, we say that a loss has occurred when the expenditure exceeds the income. It's as simple as that. Suppose we make a profit, in other words, our revenue or income was more than the expenditure. How do we appropriate that profit? How is that profit disposed of? Now that is described in Chapter 6, Section 65, Bracket 2 of the MCS Act. And a society may appropriate its net profits to the reserve fund or any other fund with the approval of the general body. So please note this, it can be appropriated to the reserve fund or any other fund provided we have the approval of the general body. The general body is the supreme decision-making body of the society. Let's take a look at reserve fund. Once again, we refer to the MCS Act, Section 62, Bracket 2 and Bylaw 148 in our society bylaws. So you should carry at least 1/4 of the net profits each year to the reserve fund. And such a reserve fund may be used for the business of the society. So a reserve fund can be used for the business of the society, and it may also be invested as is allowed under Section 70 of the MCS Act. You can't invest, for example, in racehorses, but there are certain areas where you are allowed to invest, and that is defined in the Act in Section 70. So that is all there is about the reserve fund. Lastly, it may be used in part for some public purpose likely to promote the objects of the society. So if you go to bylaw number 5, you will find a description of the objects of the society. For example, the object of the society, the very first one is to obtain conveyance. That is going to involve some amount of expense. So this money can be utilized over there. Reserve fund money can be used to attain the objective of the society. For example, the first one is conveyance. The second is to manage, maintain and administer the property. So anything that goes into the reserve fund can be used for maintenance purposes. You can use that to undertake social, cultural and recreational activities also, to provide education to your members, and to do all things, and this is quite a blanket cover, to do all things necessary or expedient for the attainment of the objects of the society provided in the bylaws. So you see that if you make 100 rupees of profit, 25 goes into the reserve fund and we know how to spend that, and the remaining 75% we shall just see how it is spent. Continuing further with profit appropriation, the remaining 75% of the net profit shall be carried forward or dealt with in such a manner as the general body meeting on the recommendations of the committee decides. Once again, general body, supreme authority, and they can take a decision. The committee can make recommendations in the interest of all. Let us now take a look at the utilization of the reserve fund. Here are the references from the MCS rules, which is 54(3), and we have got a bylaw 14A, which says that in case a society constituted with the object of cooperative housing. See, this is the MCS rules are very specific, and bylaw 14 reflects the spirit and word of this act, and it says that in case a society is a housing cooperative society, then this fund can be used for the expenditure of maintenance, repair and renewal of the society. So it's a kind of a parking place. Once again, a reserve fund is not a bank account. It is not a box where the money is kept. It is just an accounting procedure. This is to show to the auditor how that money has been appropriated and utilized. Purely an exercise in the documents. Nothing physical about it. This emphasis shown by the yellow line is because we are a cooperative housing society on a co-partnership basis. Let us now take a look at the repair and maintenance fund. As you all know that it is at a rate fixed at the general body, subject to a minimum of 0.75%, 0.75% per annum of the construction cost of each flat. Once again, remember, a fund is just an accounting procedure. It is not something in which your money is going to be locked up, and where it is to be used is defined over here. It may be utilized for meeting the expenditure on maintenance of the society property, for repairs and for renewals. So all the emphasis is on collection. That means you must collect, and that income must come to the society under a specific heading, and that heading is a fund, and that money collected under that heading must be spent on a specific purpose. A similar arrangement is made under RERA for builders, and that is known as an escrow account. So if you are paying an amount to the builder, say 1 lakh rupees at the time of booking, 70%, that means 70,000 has to be put into what is called an escrow account, and the bank will release the money from the escrow account as and when expenditure is made for the construction of the building. So the builder or promoter of the project cannot rotate the money anywhere. Once again, this is all an arrangement on paper. Which funds can be invested? Well, Bylaw 15 gives us all the guidance that we need. And once again, we are directed to go to section 70 of the MCS Act, which puts certain restrictions on where the society can invest. In the report provided by the auditor, we are told that the maintenance and repair fund at the rate of 0.75% of the construction cost of the building needs to be invested. Dear friends, that is an erroneous interpretation. Anytime the funds are remaining, that means the revenue collection is in excess of the expenditure. There are set procedures. 25% of it goes to the reserve fund. Reserve fund can be used for purposes defined by the general body or for repair and maintenance of the building or property of the society. So it's very clear, and there is no confusion about that whatsoever. Let us now see what we understand with an endowment fund. We saw that if you want to start a scholarship which people will remember long after you have departed from this world, or in the memory of your parents or some other such person that you wish to honor, that none of the funds in the bylaws as they stand today are endowment funds. This question will actually arise once the maintenance deposits are transferred to the society. In that case, we will have to make an amendment in the bylaw to reflect this new fund, and that fund will have certain restrictions on the way the principal or capital amount is to be protected. As of now, there is no endowment fund and there is no fund that requires any kind of a fixed deposit to be carried or to be retained at any given rate. There are two other funds and we shall take a brief look at that. One of them is the sinking fund, which is to be used for reconstruction or structural alterations only. And then there is a major repair fund, which will be created as and when funds are required. This is not a permanent fund. And as we saw, that funds actually are just an accounting procedure. A major repair fund will be created as and when it is required for a specific purpose. I'll briefly summarize what we have seen in this video. A fund is an accounting term. It is not an entity, although it behaves like a business entity in that its accounting is watertight. There is no crossover of any revenue, any profit or any loss to another fund. If one fund is underutilized, I cannot carry over that unutilized portion to another fund. There are specified sources of revenue for each fund, and that revenue is to be collected on the basis of the guidelines of the bylaws. Also, each fund has got a specific expense. You cannot use it for other purposes. Diversion is not allowed, and excess of income over expenditure is what can be termed as profit. And this profit, how it is handled, we have already seen. Part of it is transferred to the reserve fund and the rest of it can be appropriated as defined in the earlier slides. So dear friends, that brings me to the end of this presentation. Thank you very much for your attention and bye-bye.